for institutional investment professional use only, not for distribution to the public. The views and opinions expressed in this podcast, those of the speakers at the time of recording, and are subject to change as market and other conditions warrant. This podcast is for informational purposes only and is not intended to be, nor shall it be interpreted or construed as, a recommendation or providing advice, impartial or otherwise, regarding any specific product or security. Welcome to the Rainmaker Podcast with your host, Gui Costin. The goal of this podcast is to give listeners a unique look into sales strategies from top industry executives. We introduce you to the heads of sales and heads of distribution who will help you understand the inner workings of the successful sales organizations from philosophy to execution. This podcast is essential for sales professionals seeking wisdom from the best in the field. If you're not familiar with Dakota and their Dakota Rainmaker content, please check out dakota.com to learn more about their services.
This episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediate database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases, websites, Form ADVs, and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakota.com/Dakota-Marketplace today. What's up, everybody? Gui Costin, founder, CEO of Dakota. Welcome to the latest edition of the Rainmaker Podcast. As you can tell, this is a first-timer, if you will. First time we've ever had two people from the same company on the podcast. So I'm joined by Jennifer Lundmark and Alex Catterick, both of Manulife Investment Management. Welcome.
Thank you.
Thank you.
Thrilled to have you guys here. So Jennifer Lundmark, Head of Institutional Distribution, North America. Jennifer directs a full range of activities related to the raising of equity capital from institutional investors. She oversees the North American business development and investor relations activities related to the firm's public and private market business, including public equities, fixed income, real estate, infrastructure, timberland, agriculture, private equity, and private credit. She leads a team of sales professionals who are focused on providing traditional and alternative solutions for institutional investors in North America. Prior to joining the firm, she served as a director of marketing and client service for American Realty Advisors, where she was responsible for developing and maintaining new and existing institutional relationships for the firm's open-ended core and value-added real estate strategy since 2009. Previously, she worked at Goldman Sachs, where she was a vice president in the investment management division in institutional sales, corporate cash, and global liquidity sales roles. Jennifer is a registered representative of John Hancock Investment Management Distributors, LLC, and holds a Series 7 and 24 licenses. She also has a BS in finance from Miami University. Alex Catterick, Senior Managing Director, Head of Alternative Investment Solutions. Alex heads the Alternative Investment Solutions team in the private wealth and global retail channel. Alex has responsibilities for Manulife Investment Management, private markets, retail strategy, and managing the development, launch, and growth of new products designed for the high net worth investor base. Alex works closely with Manulife Investment Management, investment teams, product development, strategy, distribution, business development, sales, and operational support, partners to deliver unique solutions for high net worth advisors and investors. Alex has extensive background with over 2 decades of experience in alternative investments, wealth management, and capital markets. Most recently, he served as a regional head of alternative investments at HSBC. We led an alternative investment distribution, product management, and strategy across the wealth management and private banking platform in the Americas. Prior to HSBC, Alex was responsible for alternative investment sales and distribution for Barclays Wealth Management in the U.S., and additionally had a role at J.P. Morgan Private Bank advising high net worth investors on asset allocation and alternative investment strategies. Early in his career, Alex worked with Capital Markets Group at CIBC World Markets in New York, and a number of equity roles working with institutional clients. Additionally, Alex started his career with KPMG in Toronto and holds the Chartered Professional Account designation. Alex is a Series 763 licensed and received a BBA in 1995 from Wilfrid Laurel University. As you know, the theme of this podcast is really to bring out the best practices of distribution leaders and how they do things across leadership style, communication, CRM, advice you'd give to young people. So we're going to unpack all of that, but this is very unique how we have Jennifer, who really runs the institutional distribution. I'm going to have her give her bio, and Alex, who really represents and works with the alternative investment teams at Manulife and gets it into the wealth channel. So I'm not going to steal your thunder. Jennifer, why don't you kick it off and just give us a little overview, like how it all began, how you got into business.
Sure.
We've obviously known each other a long time.
I know, we were just reminiscing
so cool.
about how long we've known each other. So I've been in the business for probably almost 25 years now, which has been unbelievable to say that out loud. But started at Goldman Sachs in the asset management business and GSAM in their group, which was distributing broad, both public and private market strategies to global investors. And I focused in the U.S. in the institutional space, and then moved to a private equity real estate group. And from there, moved to Manulife. So I've been at Manulife now for a little over 9 years, and I've played a couple different roles in leading up the global efforts for their private markets distribution, and then most recently in leading up regional distribution in North America, but for both our public and our private strategies. And
we'll definitely get into this. I want to hear from Alex as well. But there's obviously, for every firm, it seems like the effort in the private side, because I'm a public markets guy, right? But now we're all having to get into the private markets. So
right.
It'll be interesting to hear how you guys are going about that. So Alex, how about you?
I started my career actually at KPMG. I'm a CPA initially by training, not for love of accounting. Very quickly after completing that, I moved over and did institutional equities for 9 years. First on the research side, then equity sales. And institutional equity sales was a great business when I got into it. It was a kind of a lousy business when I left it. And that was a bit of a mid-career pause where I felt like moving away from the institutional market and into the wealth space would make sense. And I was fortunate enough to join JP Morgan in the private bank, which I think was a great kind of transition for me. As I think a lot of folks know,
that was George's team. You're on Gatch's team?
No. Like under Mary Erdo's on the private bank side.
Oh, the private bank side. Gotcha. Oh, so on the private bank. Gotcha.
On the private bank, yeah.
Okay.
Private bank was, very good early adopters of private markets and alternative investment solutions. It's really where I learned how to think and talk about private equity, private credit, real assets, but particularly for a wealth audience. And then the journey continued. I spent a little time at Barclays Wealth in New York, and then HSBC Private Bank before landing at Manulife. And the role really at Manulife is to take our solutions on the private market side and the alternative side and leverage our existing distribution that we have through the Manulife and John Hancock entities.
Great. All right, we look forward to it. So walk me through, Jennifer, how's your team set up? How many salespeople to have, and how's it structured on the institutional side?
Sure. On the global team, so my team is North American based, but we have a global team. In North America, we have 35 people that are dedicated to institutional sales through consultant relations, direct selling, relationship management, and investor relations, which would really be kind of more private market focused. And then we have about 30 more people based geographically in Europe, in Asia, and then we distinguish Japan as a separate region. So in the U.S., we've really determined that for public markets and private market sales to be really effective, we like a specialist model. And the thinking is that there's 5,000 plus asset owners in the United States. It's a highly sophisticated, very deep market. And so when you're sitting across the table from an asset owner, they are most likely a specialist themselves. They are either, a fixed income person, or they're an infrastructure person, or they're a private credit person. And so as a sales team, will you be more effective if you also are a specialist? That doesn't mean you are a product specialist or a portfolio manager, but that you really understand the asset class that you're representing. And so can you make it much further along in the sales cycle, have a lot more credibility at the initial stages of the selling process if you are a specialist yourself. And we are a multi-strat firm, so we decided in the United States to have more of a specialist sales team. So we've got a team that focuses on real asset sales, a team that focuses on private equity and credit sales, and then a team that focuses on our public strategies. We also have another specialist team that we're developing that's focused entirely on insurance companies. We think insurance is a very specialized and technical selling process.
Yeah.
And as an insurance company, we think that we've got a great opportunity to have connectivity with other insurance firms. We should speak the same language, understand what their challenges are and how to solve them. But that's the United States. And really almost everywhere else, we have a more generalist sales model where in Canada and Europe and in Asia, the salespeople are focused on both our public market and our private market offerings.
So it's a great takeaway, because if you think about who's listening today and people are trying to think about how they should structure their teams, right? You've made a very conscientious decision to go specialist, which makes a lot of sense because there's a lot of nuance in those private products,
right?
If you will. And then having that level of domain expertise all the way down makes a ton of sense. So let me just switch gears quickly to sales process, because as we're talking about, our audience who's listening, I'm a huge believer in sales process. We have a smaller team, so it's easier to keep everybody very much adhered to one sales process, one way of doing things. How do you approach that with your team?
I think it also is an extension on this specialist thinking. I am a believer that in the public market versus private market space, the sales processes are fundamentally different.
Yeah.
In a public market closed-end fundraise, the timetable is all on the asset manager side, right? Like we have a launch, we have several closings, we have a targeted end date for capital raising. So we as salespeople truly have to drive the process to get to that end goal. And those goals are getting longer and longer to achieve, as we all know in the private market space. But ultimately, it's our timetable. Our PMs have to start investing and deploying capital, et cetera. So you start with this big funnel. You determine the target list. You do client segmentation at the beginning of the process, so that we're all in agreement upon who's calling whom and when. And then we push people through the funnel, right, and hopefully get to closing.
Right.
Whereas I think on the public market side, you're always in market. You're continuously marketing. And so there, the timelines seem to be more driven by the asset owner. They do their asset allocation study at the beginning of the year. They decide, we're under allocated to large cap value. We should do a search this year. And then we're responding to a search either directly or through a consultant. And so we have to be top of mind when they make that decision. So I feel like the time
that's so well
is
said.
a very different way to go to market. And so we've constructed the sales team and the CRM system. I know we're going to talk about that to accommodate for that.
Well, that's a big deal, because we ran into the same problem as we were trying to get into the private markets. Even how our whole Salesforce was configured, the mentality of our salespeople are all long only.
Yes.
Right. I mean, we've actually separated the teams because it's a completely different mentality.
Mm-hmm.
Now, and then it really makes sense. So you've gone publics, so it's really a completely separate sales process, which I love and makes a lot of sense. And then specialists across the private side.
Right.
But also having those closings and stuff is so much different. And I love how you describe the timeline.
Well, yeah, sure. And the other thing too, that is unfair, I think, to in a multi-strat shop, asking like the public teams, at least in our case, because we have so many products to talk about, when it's you launch a fund, it's all hands on deck, right? And so just by virtue of prioritization of timelines, you get, a lesser attention on some of the products that are always in market.
Yeah.
And so we found that we were less effective fundraising on the public side when we had the whole team come to a fund launch and had to spend 75% of their time on a particular product. And so, people just deprioritize things that don't have the same deadline, quality to them. That's not to say that we don't have aggressive goals that we have to meet on the public side as well, but we found that it was difficult for people to toggle between the two.
Makes total sense.
Yeah.
So Alex, right now in the market, it's privates, right? And
Correct.
It's wealth. That's what you hear about, obviously, from all the big firms. So you're taking Manulife's investment strategies, you call them solutions, into the wealth channel.
Correct.
Via Hancock's distribution, what have you.
That's exactly right.
Walk us through your team and how you're attacking that right now.
When I joined, I have the benefit of looking at the way that other asset management firms and alternative managers have tried to solve for this. So I don't think I'm necessarily coming up with anything new or creating kind of a new process, but we're trying to employ a generalist specialist model, similar to the way that Jen talked about it. But we have existing distribution, and we have folks in Canada, in the US, and in Asia that are on the ground. We're well connected. We have a national accounts and home office coverage team. We have an RIA team. We cover the wires. We cover the broker dealers. Similarly, Canada, the nomenclature would be slightly different, but kind of a similar build out. And then also in Asia. And then I have the benefit of looking at our private market strategies and then some of the select third-party relationships that we have to build a menu, if you will. And that menu is looking to plug into our existing client coverage teams to be able to provide solutions to advisors and their clients. And it's the solutions piece that is purposeful. I tend to think that we're building a specialist model where when we bring a specialist into the room with an advisor, that they're not there to sell something, they're there to solve a problem for them. They're there to fill a gap in an asset allocation. They're there to educate them about the benefits of private markets or alternative solutions, and help them to understand, how that might help them in turn, have better relationships with their investors and really solve that problem for them.
That's great. So within that, one thing we talk a little bit, I'm going to transition just slightly to communication. So I'll start with you, Alex. And so when you think about how important communication is and that alignment with upper management, okay, walk me through both how you communicate with your team against the goals that you've set up, and then we'll talk about how you communicate progress against your plan to the executive team.
So the communicate with the team is, we're trying to build a global alts specialist team so that we have a consistency of messaging, a consistency of approach, but then we're also able to leverage a lot of the existing processes that are in place, both on the investment side. So some of the folks that Jen mentioned, on the IR team and the business development team, and even on the investment team, we're not trying to create anything new. We're trying to take that message, we're trying to package it for the channel.
Yep.
So in terms of communication with the team, it's really just trying to set the objectives and the direction, and then build upon that so that they can comfortably go out and work in their respective regions.
Yeah. Do you guys have weekly sales meetings? How is that all set up?
Yeah, so it's growing in that my team is I'm literally building the team as we speak, right?
Great, yeah.
We've got some folks on the ground now in Asia, and hopefully we'll have some folks here in the US and in Canada later. But I will model the way that I run my team, the way that I've had teams run in the past, and I love the idea of a Monday morning meeting. When I was at JP Morgan, we spent a lot of time thinking about what's going on in the market, thinking about things from a solutions perspective. Again, coming back to solutions, I didn't make that up. It's it's the way that we've seen best in class organizations come to market and do this.
Yeah,
and that's what we'll emulate. So certainly a weekly meeting to set the tone, to understand what's important, to understand how to communicate, and then let that kind of cascade down into the broader parts of the organization.
Great. So Jen, to you about meeting cadence, and that's really what I'm kind of getting at. Is that what is your sort of your meeting cadence with your teams? Is it weekly, bi-weekly, monthly? How does that work?
So we do a bi-weekly call, and meeting twice a month, versus twice a week.
Yeah.
So we as a North American sales team have every other Monday we do an afternoon call. It's about an hour or so, and we talk. It's a little bit more of a venue because it's a broad team that's on the call. It's more about things that are impacting a lot of people. It's not just talking about deals or pipelines. So it's compliance issues. It's marketing comes in and talks. It's we're launching a new product. It's kind of a venue for broader topics. And then we break it down. And so I do have one-on-ones with my team.
Okay.
I do that every 3 weeks or so. I try not to do it too frequently because.
And how many would that be? For 35?
No. Of that, a subset of about 12 people I do a one-on-one with. So the people that directly report to me.
And in those one-on-ones, what do you cover?
There we do cover, if it's the salespeople, we will cover pipeline opportunities. We'll cover upcoming finals. We'll talk about a couple of the people that are on my team are also managers. So, any HR issues that they have, market dynamics, upcoming conferences. So it's a broad topic, but it's really supposed to be focused on, sales. And then I view a lot of my role is trying to keep my team external as much as possible. So whatever I can do to help block and tackle internally so that they can be talking to clients and prospects versus talking to compliance or legal, that's an opportunity for them to bubble things up to me and say, I've got this issue, something's not going to plan or whatever it is. That's the opportunity for me to be able to step in and maybe redirect them to be more external, and I can take care of the internal.
Yeah, you're an obstacle remover, right? I mean, that's really
right. That's really what I'm trying to do.
Great leaders remove obstacles so their team can be successful,
and
right?
So I think those one-on-ones are effective, to do that. And then my, management team, we have a call every Monday, a Monday morning call.
Okay.
And that is all of my other regional sales colleagues, the head of consultant relations, and then some of the other functions, so finance, HR, that there we do go through a financial plan, where are we, plan versus forecast, where are things falling short. So it's a little bit more of a quantitative oriented call in many cases, talking about kind of where we are in the year.
So it sounds like your setup is so you have your finger on the pulse with whatever's going on, everything within what's most important in the business?
Well, maybe not everything, but I have a good overview. Yes.
Well,
yes.
because, we were talking before in the prep call, we're talking about the meeting cadence and staying connected, right?
Yeah.
And how if you don't, you can create this misalignment. And not everybody works for a large firm that might be listening to this podcast.
Mm-hmm.
I believe everyone needs to think of themselves as Gui Costin, Inc.
Mm-hmm.
You know what I mean? As you want to run your sales operation as if you're a big company with all those controls in place, the meeting cadence, the check-ins, focusing on what matters most to the business and just making sure there's not a day or a week goes by that you're not completely clear, because things move so quickly.
Yeah.
Right. And things can bubble up. So I encourage all the boutique firms to think big and act big with their infrastructure. And that's what we're really trying to sort of pull through from you guys. And so we're a huge firm on check-ins. Right. So 8-minute check-in, 10-minute check-in, very specific what we're checking in on. And you do that very consistently. I always feel like I'm in the know of everything. And that if you're listening as a leader and you hear some weird stuff, then you can call someone after. You go like, hey,
Sure.
You know what? I heard you say this, right? Is that really accurate? Or even on the call, someone says something about a particular firm, then you can ask a question.
Yeah.
So,
well, look, there's a lot of complexity, right, to these distribution organizations, whether they're boutiques or whether they're multi-strat firms. So, I know my team in the U.S., for example, because we have specialists, we could have 3 different people calling on the same pension plan, right?
Yeah.
New York Common has, my real asset person calling them. It has the public person calling them. And it has the private equity and credit person calling on them as well. So they have to be coordinated too, right? They meet as kind of subsets of my team as well, both regionally and across their respective asset classes. So there's a tremendous amount of communication required to not have footballs and maybe look foolish or make a mistake in front of the client. And so they also have a very strong communication as a team going.
I want to get into this in the leadership, but since you brought it up and it's very topical, how do you foster that team-based style? Because it's really important. If everyone's calling on New York Common, sharing information is really, really critical, because every interaction, you're going to learn something. You have to get that information somewhere where they can then learn, right? I mean, because it does take it takes a strong leader to make people vulnerable to, want to communicate with their teammates about what's going on, especially if they're not getting comped potentially.
Well, right. Well, there's 2 parts to this, right? So I think the first one is cultural. So how do you build a foster collaboration and make sure that people do feel comfortable? I think you have to bring in the right individuals who don't have those sharp elbows. And part of your directive is to collaborate with the other salespeople in your region. It is not for me to say, here's your 10 states, call me next quarter and let me know how many calls you did. Like we can't have that. It's cultural with the type of people that I think you bring in. But you bring up the point around compensation. I do think that has to be part of this, because if you're encouraging people to cross-sell or to refer business, between one another, and to share information, they're salespepeople. I mean, we all want to get paid, right?
100%.
We're not. This is fun, but it's also, it's also our livelihood. So, you do have to, I think, build a comp plan that has the flexibility to pay people for that kind of collaboration. Even though, on one end of it, you might say, well, I'm not going to pay people twice for the same business, or double up on paying for the same business. But that really, it takes so many people to get a deal done that you need to pay people as a team, and we've been able to employ a comp plan that I believe does that.
Yeah, that's great, because that fighting over a commission that doesn't exist
is the worst thing to do, right?
Right. As I say, don't expose yourself here. This is not going to feel good. So, and then also a trust factor in you as a leader that you're going to have their back.
Right.
Right.
We have to prove that, right? We do have to pay people if they did refer over or bring in another person to their opportunity.
And you obviously naturally have to be cognizant of what's going on, right? Because once you foster that team environment and everyone starts doing that, and that you acknowledge that that's going on, it's really a game changer. I mean, I don't know if it's easier or harder, a bigger or smaller firm. I mean, we've done it with 70 people, just the ultimate. And then what you end up having, everyone sort of just takes the reins and says, okay, I'm going to be a team player. Right. And it's more fun working as a team than an individual. And a lot of times individuals get smoked out. Right. They vote themselves off the island. Right.
It gets smoked out.
Right.
Exactly.
Yeah, exactly.
Well, and I'll, not to take your job here, but I'll kick it over
please.
to you, because one of the things, the dynamics that we have is the kind of the melding between the institutional and the wealth space, right? So is an RIA, is a multifamily office an institutional client or a wealth client? And so even Alex and I are trying to really build that kind of connectivity between our respective spaces.
So how would you react to that?
Well, our view, I think, collectively is that let's put the win on the board and then figure out who deserves, again, not even from a compensation perspective, but let's figure out how to service the client as an organization. And then we can figure out ownership afterwards.
That's the only answer.
Yeah.
That's the
I'm glad I got that one right.
Well, because I literally say to our team, and it's like, look, Alan Breed at Edgewood does not care who gets paid at Edgewood. He just wants the money.
Right.
Okay, so let's actually focus on the big dog who matters most in this deal, right? And that's, at the end of the day, it's the company that matters most. And as long as you have a style of always making people feel that they're being taken care of, and you're willing to communicate that and be very, very upfront with it, and like acknowledge the elephant in the room, if you will.
Mm-hmm.
And then you end up having very loyal teammates because, like, man, Alex takes care of me. They're really aware of what's going on, that I was contributing there. Or every organization, even us as third-party marketers, have that in between where there's the gray area. What's an institutional investor? What's an RIA? That'll be the never-ending, because naturally these larger multifamily house RIAs are great fits for institutional salespeople.
Mm-hmm.
But there are folks on Jen's team that I will use on a regular basis, again, to help that subject matter expertise or to help leverage a relationship they might have to open the door to something that maybe feels more in the wealth space, but they might have had a relationship historically. And we're just trying to do a good job as an organization at connecting the dots, which as a big organization is sometimes hard to do. But one of the reasons that my role is meant to be global is to try and figure out where those pain points are and then connect the right people together within the organization to be able to be successful.
If you think about what you guys are talking about right here, it could come as a top 5. So one of the most insidious things within any organization, right, is not keeping people in the loop.
Yes.
Right?
Yeah.
Conversely, if you can accomplish that, where everyone's willing to give credit, hey, I want to make sure I copied you on this. I was talking to BBR in New York and make sure that we had this conversation. Or, hey, by the way, I'm going to call BBR. Are you good with that before I make the call? And people start to develop that. And then all of a sudden it's like, man, and then everyone starts playing well in the proverbial sandbox. Mm-hmm. That's where kind of the magic is. Then it's like, wow, everyone's just acting like mature adults.
Right.
Right. And not just all in it for themselves.
Right. And talking about the CRM systems, right? It seems like a reasonable ask to ask your salespeople to look at the CRM before you blow in a call to somebody that you've never talked to before to see maybe they're a client, right. Or maybe they're, but maybe there's already some connectivity there that you should be aware of and coordinate with your internal partner versus causing a problem. Because as soon as you make that call and the person answers the phone and says, "Oh, well, I already talked to Gui, at your firm," and so then you undermine what you're trying to do. So having that connectivity is extraordinarily important.
Well, that part, I mean, we could go on forever on this, but that respect factor, right, and professionalism, mm-hmm. right, as long as it's like at Dakota, it's so unbelievably clear. I mean, we did have an issue a couple of years ago around that particular topic. And if you have your core principles laid out and someone violates a core principle, which that to me is a violation, right? And then lying about it.
Yep.
You know what I mean? All of a sudden it's just like, then you as a leader are faced with making a crazy hard decision. Well, great. Well, that's a perfect way to segue into one of my favorite topics, which is a CRM. So not everybody, right, believe it or not, believes in the use of a CRM, okay, to run the sales business. Mm-hmm. Could you, the question I have, and I really just want to unpack, is walk us through how important, right, the CRM, listen, we're not talking a CRM to put information in. I know it's tough. Call notes, it's everyone's, it's such a pain in the neck for everybody. Getting the meeting scheduled, right, into the CRM, so you've met with. Walk me through, I'll start with you, Alex, just how important the CRM is to you to running your operation.
So I've used CRM systems historically in previous roles. We use Salesforce at Manulife, and I'm trying to develop a better approach for my small team to be additive to the CRM system. Because a lot of times, if we're going out with a customer or client, it's the actual distribution person, the consultant, right, that owns the relationship, and they're populating the CRM. But part of what I'm trying to track is how successful is my team in engaging with our consultants, and how do I think about mapping that, tracking that. So I'm building, a process right now around trying to utilize our CRM system and figuring out what we want to be putting into that system and make it additive. So that's a tricky thing, because I don't own the relationship with the advisor. I don't own the relationship with the gatekeeper, right? I'm relying on my national accounts team or my wholesalers or my consultants. But I actually need my team to be successful by, selling through them.
Right. So it's almost like they're creating opportunities for potentially those consultants.
Yeah. But
right?
it's
making sure they're being covered.
Very, very important for us to be able to track that, be able to measure that, be able to kind of memorialize that, figure out what's working.
Oh, I'm all about penetration rates. I mean, we track everything to them. Like, I could right now tell you our penetration rate for RAs in Boston right now, exactly where we stand, who are current clients, where they are in the sales cycles for every product that we have, and then measuring that and saying, okay, how are we advancing the ball, if you will, and to make it increasing the numbers. So yeah.
But as a specialist, like, my consultant isn't my client, but they are, right?
Yeah.
Like I've got to sell through the consultant, then I've got to sell through the advisor, then I got to sell to the individual investor, right? So if my consultant's already logging something in the Salesforce system around, a call or a meeting we did with the advisor, am I going to be duplicating that, or how am I going to be thinking about measuring that? Yeah. So understanding how we use CRM as specialists to support a generalist wholesaler and business consultant force is something we're trying to develop.
That's great.
Yeah.
Jen, how about you? So talk to me.
Yeah, and this is actually a best practice I would share that I didn't do previous to Manulife, and that we've started in the last few years that I think is so effective. We actually send our call notes to everybody. Like, so the guy who just called on New York Common just to talk about private credit sends that call note to my entire North American team. And we have a structure for the call notes that go out, and it's a connected directly to Salesforce. The Outlook is connected directly to Salesforce, so that they don't have to cut and paste. And so we've tried to make it a little bit more efficient. But I've been shocked, frankly, how much dialogue those call notes create. And at first the team was saying, oh, well, we already get 1 million emails. We don't need another email. But these are juicy, interesting emails.
Yeah.
You record the objections that you get or the questions that you get in the meetings. So I see how my team is handling them differently. They see how their other colleagues are handling things. So, or they say, oh, I knew that person in my previous role. It's just really created this wonderful dialogue. And we put in the subject line the name of the asset owner that you went to, and then what you talked about. So if you're not interested in hearing or reading about a note around infrastructure, you don't have to.
Right.
You can delete it. So that's just a best practice I think is great. And that note goes directly into Salesforce. Salesforce is critically important. The more we can get into Salesforce, the better. One of the things that we struggle with at Manulife is data. And just because data sits in a lot of different parts of our firm that are disconnected, Salesforce can be that engine of bringing that all together. So we're in the process right now of adding Seismic is our marketing collateral material. That's connected to Salesforce now. We are connected with other, like LinkPoint is this connectivity between Salesforce and our Outlook system that allows us to efficiently copy notes and meetings back and forth. We have a client service team that's building this whole project called Client 360 that's trying to bring in external data sources, some AI capabilities, Salesforce. It's kind of building this whole client picture that should all live in the CRM. And so then it's very easy to understand, who's calling on who, but then also for future purposes, right? The notes that say, okay, well, this guy said he doesn't do first-time funds, but he'll look at us for fund 2, 3, or 4. Well, how can you pull that out without, really having to dive through old notes? We're trying to build ways in Salesforce to easily pull that kind of information into reporting or into dashboards so that we can drive that analysis.
On that one thing, we have a drop-down menu on the account screen that says, why they didn't buy.
Yeah.
And it says doesn't do first-time funds.
A decline analysis, right? So like when you're done with the fundraising, you can go back and say, oh, okay, well, this guy's never going to do private credit. So we won't call him next time for private credit or whatever it is, but maybe it's an objection that you can overcome. So it's got to be in Salesforce though, at the CRM.
Gosh, there's just so much to unpack there, but we can't get all into it right now, but very complex organization. You need something like a CRM like Salesforce to manage it all. And also the call note thing is really significant because if you're not interested in reading call notes and somebody's just met with an investor, we use Slack, so it's actually infinitely
It's a
easier.
good idea. I'm going to take that back.
Slack is so killer. And because you can just see it right there, and then it goes right into Salesforce. We actually, through Slack, we don't do it through Gmail right now, but we enter the meetings that we've scheduled through Slack and the call notes, and then those go straight into Salesforce. So it ends up in Slack where everyone can see it. Like we have been good news meetings scheduled. So everyone sees all the meetings are being scheduled every single day. The entire sales team, it's right in Slack.
That's fantastic.
And so it's that level. And then I get to see it and I see, oh, wow, you did it. I know Jen from back in the day, we should coordinate. So you're providing a venue where everybody can see everything that's going on.
Yep.
Right. And I call that tapping into the collective knowledge of the group, which is so critical because if everyone's doing all these calls and you're never communicating, so it's it's an issue with every organization. Okay.
The other thing that we've actually started to record though too, which has been helpful, is conferences. So you go to a conference and you come out of it and all of that is in your head, right? So you do your call notes, but then what we've also started doing in our CRM is said like, okay, the IFEBP was in Hawaii this year, and we had 3 people attend, and here are all the attendees. Here's what we spent on the conference. Did we sponsor it? Did we have a speaker? So we're trying to capture conference information. So, 2 years from now, when someone says, well, should we do the IFBP again or shouldn't we? And we have this history in Salesforce. We just started doing that this year. And so it's building like this library.
But that involves, this is a really good thing because I want to just unpack this just a little bit. That's going to involve more than just the person who attended the conference.
Yes.
Right? So from a process perspective, to make this efficient as possible, because we use Gong all the time. So if you recorded a Zoom call between the participants at Manulife that attended that conference or the conference organizer at Manulife, right, who might be the one pulling the cost attendee list in, right?
Right.
If you did a Gong call and then that person who attended the conference said, okay, I'm going to go through my notes of what I heard about the call. And they just go through everything that they learned in the whole thing. AI, now we use this now.
Right.
AI you transcribes the call.
Right.
They summarize the call, right? And then give you the summary. And then you make your little edits, press save, and it goes right into Salesforce.
And it goes right into Salesforce.
Right.
So you use Gong?
Yeah. Religiously.
Have you tried Pilot, like Microsoft
No.
Copilot?
We don't use any Microsoft products.
Oh,
so.
okay. All right. So
except for Office.
We're experimenting with that, but same kind of thing. I mean, it's a tremendous time saver.
Oh my gosh. And you know what this came up? This is what I wanted to ask you. So I always say to our sales team, I say, there's not enough prima donna in you. Like, I don't get enough complaining. Like, so we started to do our monthly offsites, which I changed because we report so much. I know what's going on. I call them W days. What's working, what's not working. Mostly we focus on what's not working or the time what's working. That's when I collect all this information. And what I realized is one guy goes, well, Saturday mornings are the worst days for me. So why is that? He says, I have to go through and update all my call notes Saturday mornings. It takes like 2 hours. And I'm like, I don't want you working on Saturdays.
Right.
So we whiteboarded it. I said, okay, what are all the things that you guys do? What are the things that you don't want to do? What are the things you like to do? They're like, you're going to create something for stuff that we don't like to do. I said, that's my job. And then we literally came up, we found the software with Gong, it integrates with Gong, that transcribes and summarizes. And so now from going from 20 minutes, a call goes to like 2 minutes.
That's fantastic.
That's brilliant.
So it's unbelievable, right?
That's
so
brilliant.
anytime you can get somebody to record a call, typically we can't record sales calls, but we can record client service calls.
Right.
To make sure we get all the notes in and it's all accurate. So, all right, cool. This is like, that's unbelievable.
That is great.
Right.
I'm going to write that one down actually.
It's so good, right? Because it's creating efficiency and the tools are there.
Right.
And if you I love scheduling meetings to focus and like tackle one so it would be like, hey, the conference Hawaii, can we do a Zoom with all the relevant parties? You record it, right? You get all that data in there.
Yeah.
The recording goes, then the people that don't have to go do all the selling, that might be the conference organizers, they can then have AI do all that stuff and then manage it. Super efficient. Then you don't have the salesperson having to worry about going back and individually filling
great.
stuff out, right?
That's great.
Yeah.
That's a great idea.
So on to advice for somebody getting into the industry. Alex, the first job out of college, getting into a distribution role.
So
what's the advice you'd give them?
My view is that young people need to be expert or specialist at something. And I think of my early career where a lot of my earlier jobs were much more technical. And it gave me a lot of confidence in terms of transitioning into a sales role because I felt like I knew the subject matter quite well. So when I talk about this, my team being solutions oriented, they need to demonstrate. So when my team goes to work with a wholesaler who wants to work with an advisor, they need to be able to demonstrate that they're bringing something valuable to that wholesaler, because the wholesaler has 100 things that they can talk about with that advisor, and the advisor has 100 things that they're being, spoken to about as well. So I think being a subject matter expert, being able to be solutions oriented is the best way to be successful long term in this industry.
So controlling the controllables, right? Experience you can't control, but you can control knowing the ticker symbol of a mutual fund. You can control knowing the story, right? There's certain things without any experience that you can control.
Yeah,
love that. Jen, how about you? What advice would you give to a young salesperson getting in the business today?
Well, I wish you would have given me that advice, because you just exposed my my imposter syndrome. I don't know anything about anything. So I would actually say I would agree with that. And I would also say you just have to network. Whether it's with, I think in sales roles, you tend to think all of your work needs to be done with, the asset owners or the people that you're trying to sell to. Some of my best relationships have been with competitors, have been with people who, who have helped me along because they'd become a competitor, or then they left and they went to an asset, a different asset management firm that didn't compete, but they trusted me enough to, refer a relationship over that they had before, or a trustee becomes an investment consultant, or an investment consultant becomes a marketer. I mean, once you're in the business for 25 years, you really see this kind of ecosystem of people.
Yeah.
And the more of them the more opportunity that you really create for yourself. So I would encourage people who are starting out, particularly if you want to be in a sales role, to just really flourish when you go to conferences and when you go to industry events, and introduce yourself to everyone that you can, and utilize folks that you might not do naturally, because you never know where they'll end up.
Okay, that network, it goes for everybody, right? Mm-hmm. That's even not just I love that, because Dakota Marketplace, when we built the database, right, people were doing that on their own in these little pods. I mean, right. Starbucks, 5 people, don't compete, but work at different firms, share leads, share information and everything, which still goes on today. And that's a really big part. Well, I love that. Okay, in closing, obviously the investment business is massively dynamic. It's one of the most fun. That's why I love it, right? Because it changes every single day. Investments are being made, investments are being sold, all of this. Biggest challenges or biggest obstacle you face. So Alex, biggest obstacle you face right now in building out your team?
Building the team and getting each member of the team to get integrated with the broader distribution part of the organization, I think is going to be the biggest challenge. And it's because we have very developed and successful processes to help our salespeople be successful every single day. And on the wealth side, they historically haven't had a significant amount of alternative investment or private market solutions to sell. So how do you break into these existing processes, right? How do you take someone who's coming in with a different investment mindset, different investment solutions, different strategies that they're trying to bring to market, and plug it into all of the different processes that are supporting much more public market sale? And that's the connectivity that we're really trying to build. And again, it's the nature of trying to build a global team, but plug that global team into each of the different regional distribution hubs. And that's, in a big organization, it takes time. And I think that comes back to my point on credibility. If you can convince folks that this person is going to be additive to their relationships or their sales process, they're going to embrace them.
Right.
So that's going to be the challenge that we're going to try and work through.
Isn't it funny? Every problem seems to come down to some level of communication.
Right. Or lack thereof.
Or lack thereof, exactly. All right, Jen, how about you? Biggest obstacle?
I think the market is extraordinarily competitive. And so I think most large institutional investors are trying to have less relationships with GPs and asset managers than they have today. And so getting space on that shelf is probably harder than it's ever been before. And there's more asset managers than there have ever been before, right? The big are getting bigger for a reason, because it's easier for an LP to re-up with an existing GP that's most likely given them good performance, over the last 10 years. And so I think breaking in with a new mandate is harder than it's ever been, or a new strategy. So, and that trend probably isn't going away.
Is there anything that you guys are doing to overcome that?
Yeah, we do a ton of meetings. I mean, we really do. And I think that from a marketing perspective, you have to find how can you really be differentiated? Why is your product different than what they already have there? And so differentiation is more important than ever, because we aren't necessarily in spaces where we're breaking brand new ground. We're not in biodiversity, ocean, investment or things that we're in natural capital, and that's a wonderful differentiator for us as an organization. But we still have a lot of competition, in that space. So how do we really use our marketing, our thought leadership, our presence at conferences, our specialities within the asset classes that we manage to present the investors something that's truly worth them spending the time on underwriting and understanding, our firm in order to add to what's already a pretty crowded roster.
And this is where I think Jen's job is maybe harder than mine, right? Because your universe feels like it's shrinking, it's more mature. But all the things that Jen just talked about, we're trying to leverage all of that into the wealth channel, which I think as everyone is aware, the wealth channel for alternatives is growing. While the competition there is fierce and there's a lot of entrants coming into it, we take pride in the fact that we do have good connectivity with the wires and the broker dealers, and we've already distributing a lot of product across the public market space. So doing all those things that Jen's talking about, but leveraging them for alternative and private markets, is, I think, going to allow us to have maybe an area that we can actually grow into. You
also did bring up the sort of old-fashioned something, which I love, lots of meetings, right? Sales is still a numbers game.
Yeah.
We can work smart, we can do all of that, but more, as I say, more meetings with qualified buyers, the better.
Yep.
Right. More meetings with qualified buyers. That's our number one metric.
100%.
More meetings.
More
right?
meetings. Mm-hmm.
All right. Well, this has been fabulous.
Wonderful.
Guys, thank you so much for being here. It was really,
thank you for
really
having
wonderful.
us.
Your insights were great. So
thank you.
With that, that's a wrap. Another Rainmaker podcast. 2 unbelievable guests from Manulife. Thanks so much for joining. Can't wait to see you on the next Rainmaker podcast.
You can find this episode and others on Spotify, Apple, or your favorite podcast platform. We are also available on YouTube if you prefer to watch while you listen. If you would like to check up on past episodes, check out our website, dakota.com. Finally, if you like what you're hearing and seeing, please be sure to like, follow, and share these episodes. We welcome all your feedback as well. Thank you for investing your time with Dakota.
Hey, thanks so much for joining Rainmaker Podcast. Hope you enjoyed the show, enjoyed the interview. I know I loved it. And hey, if you wake up in the morning and you raise money for an investment firm, you do cold outreach, whether you're a sales leader or salesperson, and you don't know about Dakota Marketplace, we would love to show it to you. It's world-class. It's used by over 880 investment firms and over 3,600 individual salespeople. To learn more, go to dakota.com and click on a free trial.